These presentations will work a comprehensive bookkeeping problem both within Excel as well as within QuickBooks. Excel having the advantages of being able to see all the components and how all those components fit together to make the end product, the financial statements. QuickBooks having the advantage of being able to use forms, simple data input, and an automated system in order to convert that simple data input into the end product, the financial statements. We will work each component of the problem in Excel first and then work that same information in QuickBooks. Hello, in this presentation we will enter a transaction to pay payroll taxes into our bookkeeping problem in Excel, keeping in mind how that same information might be input into accounting software such as QuickBooks. If you would like more information about the QuickBooks Pro, take a look at our comprehensive course in the link below. We're first going to take a quick look at QuickBooks and then jump back to Excel and enter the data there. When considering QuickBooks, we are looking at the Employees section of the home page, and they provide this nice little item here that will help us to manage the payroll liabilities, meaning pay the payroll taxes. It's important to note that when we're talking about payroll taxes, in theory, they're all going to be somewhat the same in that we're collecting payroll taxes in a liability account, and now we're going to pay them, and that will include writing a check generally or having some form of payment that will decrease our checking account. The pay liabilities will change, however, depending on what country we're in, what state we're in, what type of liabilities have accumulated. That will be through the process of the pay employees when we process the payroll, in other words. The U.S. is going to have, of course, the taxes related to federal income tax, Social Security, and Medicare that we are going to keep from the employees and then pay it to the government. And then there's going to be state taxes as well that could be taken out of the paycheck. And of course, we're going to have our employer portion. But in any case, whatever the format is, the concept is that there's going to be some accumulation of taxes that we've either withhold or are incurring as we process the payroll, and then we must pay them at some time. In theory, of course, we're just going to have a liability account and we need to pay it, but we do have to consider what the terms are. When do we have to pay the taxes, for example? So we'll need to enter the time period for paying the payroll taxes, and then we can go down here and check through the payroll taxes that need to be paid. And the time period is going to be important. We got here for the month of January. So it depends on where we are and how big the payroll typically is, whether we have to pay after each pay period, or if we have to be monthly, or if we have to pay quarterly or yearly. But whatever that is, we're going to pay it at some point in time. And when we do, we can set the time frame and then set the check date and then just check off, in essence, the ones that we want to pay. And what will happen is if everything is set up in the system as it should be, then once we set that up, we can then process this, and then QuickBooks will pay off these taxes, meaning write a check for these or process the payment. We have the federal withholding, the Medicare, and the Social Security that we will be working with at this point. And if we have to add any items as we do that, we will. And then we're going to have the separate checks that will be created as we go through this. So now we're going to do this in a journal entry problem in Excel. So remember what we're doing. We're back here in Excel. We're going to be paying off the payroll taxes. If we scroll down here, we see that we have a payroll liability of the $1,598. That is all from the prior month because we haven't processed the payroll yet for this month. We're basically on a monthly payroll process. And we could check that in a few different ways. Note that if we're trying to pay off all of January and not any of February, we could go to the general ledger and just double check that and say, let's go to the general ledger. And we have the payroll liabilities. It's the beginning balance here. So there's no activity in the month of February, which would be here. And therefore, that's the January and before balance that we are now paying off. We can also go back to the trial balance for January. If I went to this first tab, just go into this first tab here. That's our first month of operations, and we have that same amount of $1,598. Going back to the current tab, back to the last tab, trial balance February. And so that's what we're going to pay off. Going back here, back to the left, scrolling all the way to the top, we're going to ask our questions then. First, is cash affected? We're going to say yes, we're paying out of the checking account. in order to pay off the taxes. This has a debit balance. We need to make it go down. So we're going to do the opposite thing to it, which in this case is a credit. So we'll copy the checking account. Going to put the new date. The date will be 2/28. And we're going to put this on the bottom and right click in L18, paste 1, 2, 3. And we could format that as we go. Go into the Home tab, Alignments group, increase the indentation. And then we're going to put the amount. We're going to make the entire amount here. That's going to be the $1,598 that we're going to pay out. Credit to the checking account, 1598. And then we're going to debit something, of course. So we'll have a debit. I'm going to use the negative of that number, the plug function, in order to get that. And then we just need the account there. And of course, we're paying off the payroll liability. So we're picking up this account. There's the number. We already know that we're going to debit it, but because we credited cash. But if we double check that, then we're going to say, yeah, this is a credit balance. We need to do the opposite thing to it, which in this case would be a debit. So we'll copy the payroll liability. We will put that on top in L17, right click and paste 1, 2, 3. Here is the journal entry that we have journalized to the general journal. Now we're going to go ahead and post this journal entry to the general ledger. We'll do the step-by-step starting with the payroll liability. Before we do, we will freeze the panes to lessen the pain of posting. So we're up here in AJ1. Scroll up to AJ1. We're going to go to the View tab, and then we're going to go to the Windows group. Then we're going to go to the Freeze panes, and then we're going to go to the Freeze panes at the top and scroll back down. So here's going to be our payroll liability. There's our payroll liability right in the middle of the liabilities section. And so it will then also be in the middle of the liabilities section on the general ledger, as it is there on the trial balance. Scrolling to the right, taking a scroll to the right to the general ledger, we see the payroll liability right there. So I'm going to go, so it's side by side. I'm going to go a little bit more, so it's side by side. And we want to be in the debit side. We have a debit over here. We're going to be in the debit side over here in BC16. BC16, we're going to select equals and point to that 1,598, bringing the balance down to, we hope, 0. Does so. And now we will go to the trial balance and see if that 0 is on the trial balance as well. I'm confident it's going to be there. It's going to be there. And there we have it. 0 there. Now we're just going to post the other side. Until we do, we will be out of balance by that 1,589, and we have no effect on net income from this transaction as well. And so we're going to record the checking account. That's the first account up top, and therefore the first account on the general ledger as well. We're going to be down here in AN15, AN15 equals that 1,598, bringing the balance from 106,144 down by 1,598 to 104,546. That same amount then should be found here on the trial balance, as we can see. And we're back in balance, debits equaling the credits. Same $52 to $54 of income, no effect on net income here. And that's because we have, we're just collecting the taxes have been incurred as we process the payroll, and now we're just paying them off. So we have one liability account and one asset account, and not anything else. When we record the expense, note that it would be recorded here in the payroll expense as we process the payroll. One payroll expense from the payroll taxes, part of the payroll of the employees. And then oftentimes a lot of firms will break out the payroll taxes that are the employer portion that would also be recorded at the point in time we have the payroll. And then the other side would go to the payroll liabilities. And then now we're paying that off. Now we're just going to check and see what's going on with the financial statements, make sure that they are updating as we believe they should, all automatically as accounting software would do, such as QuickBooks. Before we do though, we're going to unfreeze the panes. So we're going to go to the View tab, we're going to go to the Windows group, we're going to go to the Freeze panes, and we're going to unfreeze the panes. The posting is done, so we don't need to freeze the panes. So now we're going to see what happened to cash. We did something to cash, so we're going to point that over to the financial statements. We also did something to the payroll liability, So I'm just going to point those over to the financial statements, which are all the way to the right. And then we're going to take a scroll on the way all the way to the right. Just scrolling over, just taking a scroll to the right until we find our financials, those found on columns BW through CC. We see that the cash has been updated. We see that the payroll liabilities have been updated. Note, in accounting software, it would probably just remove any accounts with 0 in it. That's a little bit more complicated. It is possible to do that automatically, but we're going to show the zeros here. So just note that if it just disappears entirely from accounting software, that's what's happening. Do we still have an equal number of total assets and total liabilities and equity as we should? We do. What happened to the income statement? No change, no change. We're still at the $54 on the income statement. That $54 also found on the statement of owner's equity as part of the ending calculation of ending owner's equity to be $144,229. That same amount found on the balance sheet. Hello, in this presentation we will pay payroll taxes including FIT, federal income tax, and FICA, Social Security, and Medicare within QuickBooks Pro 2018. If you have been working along with us, we will be continuing with the Get Great Guitars problem. If not, that is okay. We will be paying the payroll taxes, and you can go through the process of that paying payroll taxes process with the Pay the Liabilities function within QuickBooks at this time. If you have the backup file and would like to restore to this point in time, you can go to the File tab, Restore QuickBooks, and that will take you to this data set so that we have the same information, hopefully the same amount of payroll liabilities to be paying as we work through the example. If not, then we can just look at this for an example of that. We currently have the open windows open here, so in order to have that open, if you do not at this time, you want to go to View and Open Windows List. We also have the only open window, that's the Home tab, and so we're going to go to and make sure you have that open by going to Company and Home tab. That's where we are. We will be, of course, down here in the Employees section working with the payroll. Our goal now not to process the payroll, but to pay the payroll taxes. In order to do this, we'll give a quick recap of what we have so far in terms of what is payroll, how does it process, what are payroll taxes, how are we going to pay them, who are they going to be paid to. So within payroll, there's a lot of options within payroll. QuickBooks itself has at least 3 tiers of payroll options, and has another option which is basically the free manual version of payroll option. Those 3 tiers typically will differ in terms of the types of reports and the number of processing in terms of forms that will be processed, including the state forms and the federal forms at the year end and quarterly, how much they will be populated from. The state forms often being the more difficult forms because they're going to differ from state to state. If we're talking U.S. federal forms, usually pretty easier. They're still not the easiest thing to process, but they're easier than some other forms because, of course, they will be standardized throughout the entire area, and so they'll be standardized. The state forms typically could cost more. If you use the manual process, then you'll have to actually calculate the withholdings as you enter the payroll within the payroll processing system here. So that's going to be the concept. The other option, of course, we have is to use a third party, such as like ADP or Paychex, to process the payroll for us outside of the QuickBooks system. And then we'd have to link that into the QuickBooks system in some way with a journal entry of some kind so that we're recording the proper expenses related to payroll in our system. No matter what tier of the payroll system we have set up, your employee system within the Home tab should look something like this. We'll have an enter time, we'll have a pay employees, and we will have the pay liabilities. The pay employees is what we've looked at in a prior time period. That's what we do when we process the paycheck, when we're actually printing the paychecks or entering the data for a pay period that has ended, including hours that the employees have worked, generating the paychecks. That's those paychecks being calculated as their gross pay minus what was taken from them, not for our purposes, but to then be paid for them in part to whatever the state and the local that including for U.S. the federal income tax and FICA, which is Social Security, and Medicare. Now, of course, we're going to pay those. So in order to look at the payroll process, we have this nice little icon, and we could just click this icon and pay the payroll that is due. But in order for us to get a better understanding of this, let's take a look at the forms and what we have so far. When we generate this pay employees, we will be withholding some from our employees for FIT and FICA, Social Security, and Medicare, and we'll have to pay our portion of Social Security and Medicare and whatever other payroll taxes that we are responsible for too as well. So it's including federal FUTA, federal unemployment tax. So anyways, we're going to go to reports up top. We're going to go to company and financial, and then we'll go down to the balance sheet. We will then change the date ranges in the customer reports section, clicking the customer reports section and changing the date range from 01/01/21, we will be working this in the future, to 12/31/21. We're going to look at the entire year that we will be working in, and OK. Although there's only one date up here, that'll allow us to drill down on the date ranges and see the detail within the date ranges. What we're looking for is the liability accounts, us owing the state and for the taxes in terms of payroll taxes. Here they are here. So we have the payroll taxes of $1,598. If we double click on the payroll taxes, we then have the items here in terms of the payroll taxes. They are generated from the paychecks that we have been generating. And you'll note they're broken out by type of payroll tax. So we have in this payroll taxes, we've got the $720, which looks like federal income tax that we withheld from Adams here, the employee. And then we've got the $258, which looks like Social Security we withheld. And then another $258, which looks like the Social Security that we have to pay our portion as the employer. And then we have the $66, which looks like the Adams, again, the amount that we withheld for Medicare. And then another $66, which looks like the amount that we have to then pay in terms of the employer for Medicare. Note, this is a simplified problem. We're only dealing with federal income tax. We're not dealing with FUTA here, and we're not dealing with any state income taxes. And so that's what we will be paying when we pay this process. We got the two employees, same process for the other employee, federal income tax. We've got the Medicare for the employee, the Medicare for the employer. Oh, sorry, this is Social Security for the employee, Social Security for the employer, Medicare for the employee, Medicare for the employer for our second employee. If we were to double click on any of those, we can see more detail within here. And if we want to see more detail within this check, this is really the net check. These are the net taxes that were taken out of the check. If we want to see the detail of that amount, we can go to the paycheck here. And we see this item, this is the earnings. This is not shown, of course, on the payroll tax ledger transaction detail we were looking at. What was the $720 federal income tax, FIT, Social Security we took from the employee in order to pay the government, the Medicare we took from the employee in order to pay the government, thereby giving the employee this amount, even though they earned that amount. These three amounts, those that we are including as a liability, they're not ours. We didn't take them for ourselves. We're going to have to put them in a liability and pay them to the federal government, as is our obligation. Then we have our portion, Social Security and Medicare, our employer taxes paid and calculated based on employee earnings, similar to a matching type of situation. So we're going to close that out. We're going to close this out. We're going to close this out. In essence, we are going to be paying this amount that is due. Now, when we set up the payroll, when do we have to pay that? It could differ depending on our circumstances. We might have to pay it the month after the payroll has been processed. We might have to pay it weekly or after the payroll dates. If we process the payroll bi-weekly, we might have to pay it by the next week. Just depends on usually the size of the payroll that we have in terms of what the government agency we're dealing with will permit in terms of when you have to pay these particular payroll taxes. Once those are set up in the system, then it's pretty easy to use the payroll process to pay the payroll. In order to set those in the system, We have to make sure that payroll is turned on first, and in order to do that, you have to pick one of the payroll processes. We're using the manual system here. We showed how to set up the manual payroll process in a prior presentation. If you go to lists up top, and then we go down to the payroll item list, we'll see some items related directly to the payroll. So we have our hourly pay, our salary pay, advanced earnings, federal unemployment, federal withholding, Medicare, Medicare employee, Social Security employee, and Medicare employee aid. And we of course will have to populate those percentages. Now, if you're in the U.S. and we're doing the Medicare, Social Security, this will basically be populated for us. Where it gets tricky is when we get to the state taxes and those things that will differ from state to state. We'll have to make sure that we have the right percentages in these items. So then we'll go to the Home tab, and instead of just writing a check and saying we're going to write a check, we have a liability, it's already tracking the reliability. Instead of just writing a check, then we want to go through the pay liabilities, and what this will do is it'll help QuickBooks to tie everything together. It'll help QuickBooks to generate reports that are all within the payroll process, and it'll help us to track the process and let QuickBooks do more of these calculations for us. So what we are going to do, instead of just writing the check, is say pay liabilities, and then we're going to select the date ranges that we're going to pay the liabilities for. In our example, we're going to say we're going to pay it for the time period of 01/01/21 to 12/31/21. We're working in the future for the first month, so we're imagining it's in February, and we are paying off the month of January in the year of 2021. So we're going to say OK. And then we have these items. So if we go through this, first, to print checks, we're not going to print checks in this example. If we were to print the checks, then of course we would leave that on. We would have our printed checks that are pre-set up, and then we would have to put those into the printer and print them. If we tab through these items, so I'm going to uncheck the print checks. We tab through these items, it's going to be printed from our checking account. If we have another account, a payroll account, then we want to make sure that we have the proper account in terms of the cash being removed from the proper account. Review liability check to enter expense penalties. We're going to keep that as the default. And the date for us is going to be 02/28/21, February 28th. That's when we're going to write the check. But remember, the dates that we're running the payroll are January 1st through, show payroll liabilities, January 1st through 01/31/21. So those are going to be the liabilities we're paying. So we're paying the liabilities as of the end of January. We are paying them in the end of February. This again is something that you're going to make sure you want to set up and have the proper payroll time period set up in accordance with whatever regulations we are dealing with. But the point being that we're going to write this date, of course, the date that the check that we're going to write. And we're going to have these dates being the range in which we're going to be dealing with the payroll. So everything that happened in January is the range we're dealing with here. Then we can check all that applies. So we're going to say payroll item has no liability. So, okay. Oh, actually, I'm not going to have the federal unemployment, so I'm not going to check that one. So they're saying that no vendor has been set up. We don't have any liability for it. And so we're not going to be using that. Payroll item has no agency. So if that's the case, we're going to have to set up the agency that we are going to be paying the federal withholdings to. So we will set up the vendor. I'm going to say yes. We're going to say enter name for the federal withholding tax payroll item. We will keep it at the federal withholdings. This is going to be a federal withholding. Payroll item is inactive, no. So we're going to say next. Enter name of agency, which liability is paid. If we look at the agencies, these are basically just the vendors that we have here. Now these are going to be federal, so I'm going to say Internal Revenue Service. The Internal Revenue Service. And then we will say next. It's saying we haven't set this up. Do we want to set it up? We're going to go yes, we're going to set this up. I'm going to set it up as the quick setup rather than the long setup, which is where we would put the address and everything else related to it. We're going to set the quick setup and next. and select the items that will increase wages for calculating federal income tax withholding. I'm going to keep this as the default on both of those, the salary and hourly being the only two payroll items we currently have set up, and finish that process. So there we have that. I'm going to check off the Medicare, do the same thing that we're going to set up and say yes, that is going to be Medicare, and we're going to keep those two. We're going to say next. And then it's going to also go to the Internal Revenue Service, so it's picking that for us now. These accounts are correct. Liability account, correct. We're going to say next. Payroll expense, correct, next. And we have the rate 0.045, that's it. So we're going to say next. For both the salary and the two items we have set up, that is it, and finished. So we're going to check off that item. Once we have the items set up, we're going to go ahead and create the checks here. Now note that, so we have everything checked off, we're going to go ahead and create the checks. If we wanted to double check this, note we could run the nice little payroll liabilities report here. This is a report that could be found in the reports, and if we went to employee and payroll as well. But if we take a look at that report real quick, we can see our liability report as of 01/01/21, January 1st, 2021 to January 31st, 2021. And here is our data. So that's could be useful to run that. So here we have that. That's going to be what we have. So we're going to say create. So we will create this, and it has then generated the checks that need to be generated. We're going to go ahead and close this. And then if we take a look at what has happened, we can go to the balance sheet at this time and scroll up to the top, looking in the checking account, double clicking the checking account. Scrolling down, we see the checks that we have written. We wrote the 3 checks here, put them in as separate checks. So there's the 830 there that the payroll check has been generated. So when we go through this process, it will create an actual check. And we can also go to close this out. If we go to the payroll liability, then if we scroll down, we have the payroll liability. That is now 0. So if it's 0, then we could check this by going to the lists up top and going to the chart of accounts. And then we're looking at the liabilities. We want the payroll liability. There it is. It's at 0. If we want the detail, we can double click on that item and see the detail. If we want to look at the individual checks, we can check on an individual check and see some of the detail for that. So if we close this back out, back to the Home tab, that's going to be the process for paying the liability. Once again, once it's set up, it's not too bad of a process. It does take a little bit of setting up. We did have to set up some vendors at this point even still that had not yet been set up for the payroll process. But once those had been set up next time, it would be much easier for us to pay that payroll liability and fairly easy for QuickBooks then to track that information. We just got to make sure that we have it all set up properly within the setup process when we put the payroll items together. Remember that when we did pay off this liability, note what happened is we paid off the liability, decreasing the liability, and decreasing the checking account. No effect on net income at this point in time, at the point in time we pay off the liabilities. The income statement was affected for both payroll taxes and the wages when we generated the paychecks at the time when we debited or increased the expense for payroll tax expense and payroll, and as well as payroll expenses itself, decreasing the net income at that point. Here we're just paying off for something that has happened already in the past, something we have consumed, labor that has been consumed in the past, and we now owe it. So we're paying off a liability with the cash here.